Hello, everybody, and welcome to episode 39 of Bank to the Future Live. I was actually celebrating my 39th birthday this month, and it is episode 39 of Bank to the Future Live, and we're doing a international one. So we've got Adam Vaziri on the show today, the CEO and, well, no longer CEO, actually chairman and founder of Diacle. And he's actually at the Block Show Asia conference in Singapore. So we'll get a quick update from what's happening there. But in this episode, it's coming towards the end of the year. We've got December next month. And we thought we'd do a special episode on the state of play of security tokens in Q4 2019. And no state of play of security tokens would be complete without understanding some of the utility token cases and proceedings that are happening right now. So I've got Adam on from Singapore, and we got Famida moderating as usual. So if you have any questions in the live chat, please do let us know. Famida will be going through those, and she'll let us know if we can answer any questions as we go through. Also, if you are watching on Twitter, we should be live there. If you want to get our attention and ask a question, use hashtag BFLive. And if you're in our Telegram channel, then the Telegram channel is where you can also ask questions, where our team will be there picking them out. So the first thing we wanted to do is go through some of the state of security tokens in Q4 2019. And I think it would be prudent to go through some of the utility token cases that are happening right now as a lead into where we think this is going next through 2020. And we'll also share some of the things that Adam and the team at Bank to the Future are all thinking about in terms of security token launches in 2020. But towards the end, we'll go through some of the articles. There was lots of press coverage. I was quoted in CoinDesk this week suggesting that next year we think 50% of all our offerings are probably going to be security tokens rather than equity. And also some of the other news that's happening in our portfolio companies. So welcome back to the show, Adam. We're really looking forward to having you as more of a regular guest because I consider you probably one of the greatest minds in terms of structuring in terms of the general crypto blockchain corporate finance space. So thanks for joining us again.
Thanks, Simon. Great to be back.
Awesome. Okay, so I think it's worth covering some of to bring us right up to date with the security token side. I think it's worth looking at some of the more significant cases that are happening with the SEC. And I do want to disclaim that although Adam is a lawyer, he's not a US lawyer. I think he knows a lot about the space in general because blockchain is so global, but I'm not a lawyer, so none of this should be used as legal advice. You should definitely seek your own independent legal advice when structuring security tokens. And also the Diacle team work a lot closer with Bank to the Future now. And so if we've, through Diacle, we can offer some more advisory services, corporate finance services, structuring services for those looking to launch security tokens or even utility tokens, and we can discuss those different aspects. But I think there's quite a few cases going on which are really relevant right now. I think we got the Block One case, which is the company responsible for launching EOS. We've got the KIN case, which is the utility token that was launched that is in a case with the SEC at the moment. We got the Telegram case. And I think between those, there's quite a lot to learn and lead us into what we think is going to happen with security tokens. So I think just taking some of those cases, we'll just give a quick commentary on, I guess my perspective as a non-lawyer, what seems to be happening. And then Adam can also share his insights as well. So for those of you that don't know, the Block One was the company that launched the EOS token and the EOS mainnet. And it seemed like they launched a ERC20 token on the Ethereum blockchain before launching their EOS mainnet, which was their utility token that goes with their token. From what I've heard, one of the things that led to them settling with the SEC, and again, this is hearsay, I can't confirm this, but some of the things I've heard is the issue was that they created a token which didn't actually have utility because it was an Ethereum token. It wasn't on the mainnet, and it was allowed to trade. And because it was allowed to trade, the SEC might have considered it a investment contract where people were using it for speculation because it didn't have utility. So the first lesson is that by US laws, the token has to have utility to be considered utility, bit of a no-brainer. Also, the token sale didn't do any KYC. So although they told that they strictly prohibited US purchasers purchasing the token, it was also because they didn't do KYC, it was just a tick box saying I'm not from the US, but it's still, although it did geo targeting, unless you're doing KYC, people could be using VPNs and lying and breaching their terms in order to purchase tokens. So I think that was used to put it in within the jurisdiction of the US. It was tradable, and also it was open to everybody. It wasn't restricted to a certain class of investor. They stated that it wasn't an investment and people should be purchasing it for utility. And so I think EOS or the Block One team, without me having spoken to them, or the legal team there, decided that the prudent approach was to settle after raising approximately $4 billion and paying a $23 million fine. So, Adam, what do you take out of this case? And what do you think the lessons are for those that are engaging in blockchain finance?
Yeah, I mean, that's, really, I mean, it's a watershed moment, the EOS fundraise in of itself, being able to raise so much and so effectively as EOS managed to do. And so for such a protracted period of time, an ICO that lasts a year is an incredible feat. So I would say to a certain extent, the settlement is fairly moderate in view of the scale of the fundraising effort. But something is bound to go wrong. And for them to walk away with a settlement like that, where percentage-wise represents only a fraction of what they raised, I would not say is a particularly bad outcome for them. But it has to be pointed out that if someone were to attempt to do the same thing today, that they wouldn't really have the benefit of saying I didn't know, or saying well, there was no legal precedent about this. They wouldn't have that benefit because they can't really say that EOS did not happen. Now there's case law, at least settlements, and people should be referencing those settlements as a way of informing how they construct their token sales moving forwards. Most likely, people will be following the approach that Blockstack have taken with their security token offering. They're effectively selling a utility token, but they're packaging it in an investment contract. Now, the point that I think is the most interesting is that the SEC has not really defined what a utility token is, but has given indications about what it considers not to be a security. And so the indication that they've given, for example, is that Ethereum, even though it did do, a crowdfunding exercise in the beginning, that it considers Ether not to be a security. So that's a good indicator of what they're looking at in terms of defining what is or is not a security after the fact, after the crowdfunding exercise, so to speak. But we have to remember one thing about the US, and it's something that's very peculiar to the US, is that everything is based on the substance of the transaction. If I'm selling furniture and I'm structuring it in a way that I can tell you you're going to make a 200% return on buying this table, then I'm selling an investment contract. So it's a very peculiar approach to defining investment contracts. In the rest of the world, it's not the same. And people will not be looking at substance in the same way. For example, in the EU, you'll just be defining whether or not it is or is not a transferable security. And securities are defined as financial instruments, and instruments are defined as shares, bonds, options, futures, derivative contracts, and they are formally defined instruments. So it is a very peculiar situation in the US, and how people are using tokens for fundraising in the US and can't really be ported across to the rest of the world. But in summary, I think the EOS case basically proves that that funding raising was effective, and they walked away with a fairly minor fine in hindsight. But moving forwards, people cannot plead ignorance. To read the settlement very carefully and decide how they want to structure moving forwards.
Okay, so I think that brings us to the next interesting case, which is Telegram, because from my perspective, what I saw from the Telegram raise is they didn't make any of those mistakes in that they sold it as an investment contract. It was a contract that gave you entitlement to tokens in the future once the mainnet was launched. So they didn't have, an ERC20 token before there was utility or a blockchain. They also they did full KYC, so they knew exactly who was purchasing it. They knew and deliberately knew that there were US purchasers that were investing in these investment contracts. It wasn't purchasing the token for the utility, so they sold it as an investment. They did full KYC. From what we can tell, they complied with all their anti-money laundering requirements in terms of knowing who the beneficial owners are and everything you need to do. And they did it through the banking system as well. So it wasn't just cryptocurrency payments. These were people paying fiat in dollars through the banking system. They knew that they were taking on US. They knew it was an investment contract. So it was really in stark contrast to what was done with the Block 1 EOS case. But there was a couple of things that may have led to the SEC doing their emergency, forcing them not to launch the token on exchanges. And so they filed their Form Ds. They did a 506 either B or C offering. I can't quite remember, which means that you can solicit to the public. I think it was a 506C. They filed everything, but the SEC still waited till 2 weeks before the mainnet was due to go live to actually stop them. From my perspective, what I think they did wrong that might be leading to the case right now is that although they did everything correctly, from what I can tell, they did a tiered pricing structure whereby it was done in 3 tranches. The first tranche was a cheap price. Lots of institutions subscribed to those. I think it was 850 million sold. Then they did a second tranche at a lot higher price, which meant that the institutional investors that invested in round 1 were purchasing at a lot lower price than round 2. And then they canceled round 3 from what I can see. But then lots of people that held the investment contracts started selling futures on those tokens. And lots of exchanges were doing IEOs and, selling tokens that didn't exist, which were essentially futures contracts at significantly above the price that the original tranches were in. So what I think, from my perspective, what I think the SEC was doing here is they knew that there were institutional investors that had significant discounts that could flip those tokens based upon the futures price onto a cryptocurrency exchange. And that because it was just purely an institutional and accredited investor round or equivalent in offshore jurisdictions, I think the SEC wanted to ensure that the accredited investors weren't flipping onto the retail as soon as it hit the cryptocurrency exchange, because there was such a big differential in price. So like one of the things that we did when we did the Bank to the Future token, one of the really important factors for us was, define the investment contract, file the Form Ds. We ended up raising very little in the US, so we filed our Form Ds for a minuscule amount in the end. But also ensure that everyone gets the same price so that you don't have these, crazy different differentials when it hits, when the utility operates, and also only launch it for trading once there is actually utility, so people can use the exchanges to purchase. But I think from my perspective, the thing that's getting Telegram right now, and they are actually disputing this because they did everything correctly. But I think it's that differential in price and stopping the accredited investors flooding retail investors in the US. What's your perspective on what's happening with Telegram, Adam?
Yeah, I mean, on a personal note, I feel, obviously this is something that the crypto market needs. From my point of view, I'm really welcoming the arrival of this token and the Telegram blockchain, and I think it's going to be an amazing thing for the crypto industry. And you're right that they spent, they did everything by the book, even to the extent that they said in their investment contracts where other people may have been a little bit generous about their timing when it comes to delivery of the token. They were like, if we do not deliver the blockchain by this said date, then we will refund you. I mean, I haven't seen an ICO operate with such kind of a binary logic that if this date occurs and we haven't delivered, then we give you the money back. And for the SEC to intervene, knowing full well the contents of those investment contracts, is a very strategic move, I would say, by the SEC. Not trying to take a cynical view on this, but it's a very strategic view. But I think, as you say so rightly, the SEC is effectively like the most, let's say, vigorous enforcer when it comes to securities regulators around the world. But I think what they're trying to prevent here is a blowback, where, as you mentioned, institutions would have received heavy discounts in the initial phases. Now they want to offload those tokens onto the retail punters that are coming in because they're so excited about the Telegram. Everyone's excited. It's a retail product by its very nature. So people will be drawn to the brand, be drawn to the token, and may lose their shirts, frankly, when the market is overwhelmed with the downward pressure when it actually reaches the market. But, we can only really speculate on that, as being the kind of like their premise for initiating that action. But it does, when you look at it in comparison, it does feel somewhat unfair, considering the amount of effort that they undertook to do things, at least as they perceived it to be, by the book. But it is true. I mean, we have to be careful. We have to be very careful in this industry that we don't, if you look how, just getting out of the crypto bubble for a minute, the FCA, other regulators around the world are concerned about what retail investors are investing in and have access to. And it's not because, they're trying to create a parental state of some sort. It's because retail investors are losing money. And, the contracts for differences, for example, are now being increasingly traded in the European market and facing increasing restrictions in the retail market because they're being targeted towards retail investors. Contracts differences based on Bitcoin are going to be excluded from retail investment. So, I think it's normal for the regulator to think about what could be the impact of this listing and how it could affect retail investors and putting it in the early stages.
Okay, thanks, Adam. The switching gears then slightly. So that's the state of play with utility tokens at the moment. I think it's getting pretty clear what you need to do in the US in order to comply with those. But then again, there is a big world outside the US, and we seem to be creating this two-tiered market. And that's really the state of utility tokens. But that kind of brings us to the security token side now. So, when we decided to make a strategic investment in Diacor and align our interests a lot closer, so we could work together to bring forward the security token industry. And also last week we announced, so you can see previous episodes of Bank to the Future Live when we made the announcement. And also last week we made the announcement about BMI Capital. And prior to that, we also did the altcoin.io technology acquisition because we're looking to really support. We have our bread and butter product at BnkToTheFuture.com, which is investing in the equity. We were the world's first security business to focus in the crypto space. And we build a lot of processes, but now we want to expand that out to really build an ecosystem and help the security token industry along, which is why we were so happy to, work with Adam and Diacle, because they've really worked on some groundbreaking cases. To give a few, they did the first regulated structure in Isle of Man for selling a token, which was the first Cardano structure. They also worked with crypto facilities to help them secure what they used to launch a derivatives market. That was the Cardano token sale ended up selling $50 million. The crypto facilities was later acquired by Kraken for a reported $100 million. And also, you've been working with the Isle of Man in terms of creating a structure for a regulated lottery. That was the first time that was issued. And I think you also did help BitPays, the first Bitcoin business operating out of between corridors between UK and Africa and other corridors to secure an FCA money service operator license. Maybe I said those slightly wrong. You can correct me if any of those are slightly inaccurate. But what are you seeing now in the security token space? Because we've had a lot of chats about what security tokens can actually change capital markets forever. I think we're going to make some bigger announcements in 2020, because we've been working on security tokens that don't just necessarily take the traditional financial market and turn it into a token, or allow institutional investors to invest in tokens in the same products that they were investing without tokens. I think the big opportunity is creating products that couldn't be achieved without a security token. And so we've got some big announcements that we'll be making in 2020 now that we've got this ecosystem for launching these security tokens. But where do you think, what's the state of play with security tokens right now?
Yeah, I mean, I think what's really interesting is that the market itself, the players within the market are becoming more mature in terms of what they need in order to be able to operate, to make it easy for people to issue security tokens. What we've seen, for example, in the United States is that both Securitized, which is one of the main players in the market to provide infrastructure for issuing security tokens, that they have applied for a license to become a transfer agent. And they got that license back in August, and Harbor only recently, I think it was last week, announced that they got this license. Now, what this license basically permits them to do is hold the digital record of ownership for companies or for securities. Without that license, it means that they're just in the game of providing technology. But with that license, they're able to provide a much more user-friendly approach to helping companies issue security tokens, because they can say, look, we'll create the security token, we'll do it on the blockchain of your choice, and we'll launch it with you, and we'll maintain the record. It would be the last resort in terms of who is the legal owner of that record. So the technology is there, but then the legal infrastructure and licensing is needed to support that to become a usable system. So we're seeing that start to emerge. So platforms, issuance platforms in the primary markets, get the licensing that they need in order to provide a scalable solution in general for the market. Obviously, what we're not seeing is much movement in secondary markets. And I think that's probably the biggest nut to crack, and that's going to take some time to address, not least because the regulatory infrastructure for it is so significant that anyone really entering into that market needs to be well capitalized, not only from the monetary side, but also from human capital in terms of the type of people that you need to run a competent regulated market. So I think that side is still going to take some time, and I would predict another 3 years before we start to see mature regulated security token markets. But
somewhere in the middle of that is regulations that offer further clarity around the security token issuance processes. And what we've seen is, just observing the European market, which is, I would say, one of the most advanced markets, or the most receptive markets potentially for security tokens, due to the harmonized nature of that market. We're seeing, the UK, obviously it's not going to be in the EU for long, but came out with a very clear stance on how to treat security tokens. But the regulator that's gone a lot further in that regard is Lithuania. And I was very impressed to see this week that they published a comprehensive set of guidelines around security token prospectuses. So what a prospectus is an offer for investors to invest in a project. And in the EU market, if you want to trade your security on an exchange, you need to have your prospectus approved, which means you go to the regulator and you make a lot of disclosures about your project from the financial corporate governance point of view, and then the regulator approves the prospectus and it can be listed on the exchange. But also, in addition to that, if you raise over a certain amount, then you need to have your prospectus approved. But no one has really taken charge as a regulator and said, well, we've dealt with approved prospectuses for normal securities. Now we're going to set the guidelines for approving prospectuses for security tokens. And Lithuania is the first regulator in the EU come out with these comprehensive guidelines. And they are really fascinating. It's almost a tick box exercise of everything you need to do to get the first approved security token prospectus in the EU market. So you don't have to, there's no guesswork involved. It's all set out in those guidelines, and it's 30, 40 pages long. So I think offering that level of legal certainty is a must to give confidence to companies that want to raise capital using these means, because on the one hand, even if the technology catches up and you have the likes of Harbour that have become transfer agents, you still need the regulatory clarity for the issuers themselves, that they can feel comfort in proceeding with that somewhat expensive effort of doing a security token offer.
Yeah. So one of the weird things about security tokens at the moment that we've been trying to address, because we'll tell you here for the first time I've been invited to speak at the North American Bitcoin conference in Miami. I was invited to that several times, but I never actually took the offer. But this time I've decided that was the same conference where Ethereum launched. And the team are all working around the clock at the moment to get a product together that we're going to be announcing at the North American Bitcoin conference during my talk. So really looking forward to that. And we think that this is a product that addresses some of the issues that the security token ecosystem is experiencing right now. And that's a chicken and egg problem. So many people are excited about the security token ecosystem and what it can bring and the promise it can deliver. And more people are selling, well, why would I invest in a token over a traditional investment product? And they're looking at what happened with ICOs, which is that there was deep liquidity. So you had the ability to trade. And obviously, that's been a real downfall with private equity. One of the most frequent requests we had at Bank to the Future was, how do we sell? And so that's why we launched our secondary market, which is not deeply liquid. We're looking to bring that out of beta, but give people the opportunity to buy and sell in a closed environment without causing regulatory challenges there. But the promise, essentially, of the security token is liquidity. And so when people are selling security tokens right now, they're saying, well, why would I want to do it over an investment product? They're saying, well, it's because it's liquid. The problem is it's not liquid because there's no liquid secondary market exchange. So there's a bit of a chicken and egg. One of the other issues that we're seeing as an investor-led platform, when we construct financial products, it's all about the demand from our investors. We've always been investor-led. We took the opinion a long time ago that if we create the products that investors want to see, and we give them the chance in a high-risk, high-return environment to be able to have the best shot at high returns, and we've had several highly lucrative deals on the platform, and others that have gone bust. It's the nature of a high risk, high return environment. But as an investor-led platform, we've always been thinking about what is it that our investors would like to see, as opposed to just thinking about the company raising the funds. Because for me and for our team, it's always been the success is not the company raising the funds. The success is, game-changing financial technology being brought to market, which then leads to the investors benefiting and creating, a high return investment, which has always been our goal. So we've been looking at what institutional investors want. Well, institutional investors do want liquidity. However, there is no liquidity right now. So when you're speaking to institutional investors, there isn't really anything you can fulfill. And they ended up, and then we've got to go through this process of learning how to store a private key and learning the token process. That seems like a bunch of risk. It's not something we'd want to do. We'd rather just invest in the traditional product without the token. Then you reach out to people like, many of our investor community are people that want to change the financial world forever. They're Bitcoin OGs. They're people that made a lot of money out of being early adopters in Bitcoin or early adopters in Ethereum. And they're looking at these products. And when you come to them with, here's a tokenized real estate investment trust that pays 5 to 6% per annum, they're saying, well, why would I want to give up my Bitcoin for that? Now, obviously, some people are looking at trying to hedge some of their exposure and risk. Not everyone can live in the volatile world of crypto. But it's not quite a big enough market, and it's not generating enough interest to launch it to the crypto investors. Most crypto investors are either doing it for, evangelists, for reasons that they love the industry. They want to see the disruption. They think it's a net positive for the world. Or they're looking at the high returns that have been achieved through crypto in the past. So you've got these disconnects between these different markets. You then also got the promise of liquidity with no liquidity. So what I think the products that need to be created, and the way that we're thinking about this at Bank to the Future, is that there needs to be a product that makes a lot of sense in terms of returns, even if there is no secondary market or there is no liquidity. So the liquidity will come. When the ICO was conceptualized in 2012 or 2013, I can't remember, when we were talking about colored coins and all those things on Bitcoin. It wasn't until 2017 that it became deeply liquid. So that was a 4 or 5 year, process of going from conceptualization to liquidity. We might see the same thing in security tokens. So in the time, we got to get over the chicken and egg. We got to be able to launch security tokens that make sense for the investor in terms of returns, even if the liquidity is not there for several years. So that's one of the first things we were looking at. Also, if an institutional investor can invest in a normal product or a traditional product that they're used to, but then you add all this complexity of a token, there's got to be a reason to do that. And so we've got to create a product that does something that couldn't be done with the traditional investment product before. And the fact that you can program, dividends and returns into these products is something that was very hard to achieve through a traditional, clearing agent, a lot of middle people, a lot of structure, and fiat, the slowness of the fiat system. So, and then finally, it's got to be something that actually competes in terms of the opportunity of an upside. So some of our investments on Bank to the Future have outperformed Bitcoin, and people look at Bitcoin as a benchmark. So Kraken produced, those who invested in the Series A versus the Series B, it was a 200x, almost 20, well, not starting at zero, but, just under 20,000% returns. These are high risk environments. With the Bitfinex sale, started at $1. It peaked at about $16 on our secondary market, and it paid 5x the amount that the people originally invested in dividends. Look at the Ethereum mining product. It was right, Ethereum was around about $1. We had an Ethereum mining backed security. People were seeing lots of ETH every day. It went from $1 to a peak of about $1,300 and created, over a 100x opportunity for those, depending on when they sold, how they invested. It's impossible to say across all because everyone does things slightly different on Bank to the Future. But we've got to look at, that's the type of thing that you've got to be able to produce. So, traditionally, the only things that have been able to produce those types of returns have been investments in private equity, in a high risk, high return environment, and cryptocurrencies. So when we're thinking about how we're going to construct security tokens, we're thinking about what would be attractive to them, what would be attractive to institutions to want to go through the process of learning this new thing, and also how can it still be attractive, given that there is no liquidity right now, but the liquidity will be a really nice bonus in the future. So there's a little hint about how we're thinking about it. And that is all in the goal of getting over the chicken and egg by having a really great security token offering that we plan on launching at the North American Bitcoin Conference, or announcing, with those things in mind, to see if we can get over that chicken and egg. And then once you've got good security tokens with large distributions, you've got companies like Blockstack, which are doing their Reg A Plus offerings. Then the exchange ecosystem can catch up, which also requires all the different players like issuers and we've been investing in Securitize, you mentioned them earlier, through the platform, but it's building a whole ecosystem. And really it's got to be investor led. That's what's going to get over that hurdle. So we hopefully in 2020 we can actually move that space forward, and use a lot of the players, like Diacol, like BMI Capital, the Allcoin.io technology, and put that together into something that can really have an impact in the ecosystem. So that's some of the things that we've been working on. In terms of security tokens that you're seeing at Diacol, Adam, what types of things are people trying to do, and how are you thinking about them at the moment?
Well, there are people who are thinking about security tokens from the point of view of an efficiency, an administrative efficiency. So how do I reduce the cost of paying dividends, or how do I increase efficiencies? Others are thinking, well, how do I fractionalize even further, and create even greater access to, this is really a retail-led type of innovation, but how do I fractionalize and give further access to a more voluminous market? So, and trying to address the problem of being able to access those markets. It's still not very easy, to go and create an account, to go and trade on the New York Stock Exchange, or so be it. That's why the valuations of, the likes of Revolut, Robinhood are very high, because they're providing that access and bridge. So security tokens, by their very nature, permit access. So I think people are thinking along those lines, but oftentimes I in the same vein that you're mentioning, it's about really what value is there for the investors. I care to see the investors come out with a success on their hands, that they can feel genuinely, that this is a genuine innovation, which is interesting. But I'm not particularly interested in innovation if it has no benefit aside from it being innovative. I want to know what the benefit is for me. And so the design of these security tokens really need to, as you say so rightly, be investor-led, and really consider, well, there's the company that wants to raise money. Well, of course, all companies want to raise money, but what do these investors actually want? And what degree of risk are we prepared to present to them? And I think
we've lost you, Adam. I can't hear you anyway. Famida, can you hear Adam?
Yeah, no, Adam has had some difficulty with his internet there.
Yeah, I think it's the hotel internet and in Singapore.
yeah, sorry.
No worries. So we'll carry on. So Famida, maybe you've got some. We can take this in two directions. I can either start going through portfolio news, but maybe there's some good questions that have come up that we might be able to take.
Yeah, we have a couple of questions in the live chat. We have one here that's asking, can the US shoot on a token even if nobody in the US buys it? I.e., can they stop your token and business even if you don't sell to us guys?
This is probably the question of an airdrop. And again, I got to reiterate, this isn't a show for legal advice because it's so much dependent upon the specifics of your particular case and what you're trying to achieve. You know, it could be a stable coin, in which case there's no increase in value. It could be something that's going to be tradable on the exchange, therefore people could see it as an investment contract. I think it's pretty dangerous to try and give some kind of generalized advice without going deep into the specifics. You know, as somebody that's had to deal with so many legal professionals as we've created this business, I can't believe I find myself answering that exactly how our lawyers would answer that for us. You want a straightforward answer, you never quite get one. Maybe, hopefully, if Adam's internet is good, he might have a comment on that.
I didn't get the question. Can you just...
I think we're struggling with your internet. We'll be struggling to hear that as well. So I think we should probably.
Well, I mean, if Adam can switch to phone internet, maybe whilst we're chatting, and then you can rejoin and let's see how your internet goes.
Okay, we'll carry on answering some of those questions.
Cool. So does a security token have utility as well? Is the next question.
This one's a really interesting one, and it would be great if Adam had his perspective, because one of the things we're obviously looking at.
Oh, I think Adam's testing his internet. Let's have a here.
Seems pretty good right now.
All right, you go ahead.
Okay. All right. So this is a really interesting question, because one of the things I still think that a utility token is a great thing for a company to utilize in order to build a community, in order for people to benefit from any growth in the network effect of that organization, or it depends how it's constructed. So take our example, the Bank to the Future token. We're very keen to continue increasing the utility of that token in any way we can. You know, we've been having conversations about how security tokens and utility tokens can interact. And in designing certain security tokens, we've also been looking at how this intersection between the utility token and security token can be. I think that's going to be a really interesting thing that's going to come out. And I think that there is genuinely, you know, utility in security tokens, and also utility tokens that aren't securities that can be part of a security token ecosystem. I think that's going to be a really interesting one to unfold. I think Adam switched to his phone. Let's see if the question was about utility and security tokens and how those two are going to interact.
Yeah, I mean, for me, that is one of the most exciting areas. It's the cutting edge of taking a legal financial instrument and then embedding that in a blockchain environment. That some of those aspects of embedding it in the blockchain environment has got really nothing to do with securities whatsoever. So you could end up with a security of some sort that has loyalty properties, which loyalty points themselves are not really defined under investment contracts. They are commercial contracts between a company and a user. And what better way to represent loyalty than through utility tokens? So you can combine these wonderful areas, which loyalty is all about creating stickiness between the customer and the product. But at the same time, by combining that with an investment instrument, you then have kind of like the holistic view. Imagine if your air miles, you received them, but also you were receiving them together with the shares of that company, so that you could extract essentially value from the company and promote even more loyalty towards that company. So I think it's going to really, to me, one of the most perfect areas for security token design is the marriage between those areas, because utility is all about product, securities is all about return. And by combining the two, you end up probably with one of the most stickiest investment assets in the market.
Yeah, and which I think is, is essentially what Binance pioneered. They created a utility model that had utility, and that led to, very sticky customers that wanted to promote the entire ecosystem, that also became wealthier as the network effect grew. And as the clarity between security and utility gets clearer and clearer, at the end of this, there's the opportunity to create, a really game-changing financial product that rewards that. And speaking of that, I do have to shield slightly, and that is for the Bank to the Future token holders. I know Famida has been involved in some of the meetings with the marketing team. We have completed the design of our rewards and loyalty scheme using the Bank to the Future token, and we're really excited about launching that on the platform. The coders are working on it right now as we speak, so we're really excited about finally being able to, Famida was really pushing this within the organization for a long time about our loyalty scheme and rewarding our loyal investors. We've had, investors that have an average of 14 investments through the platform. We've got investors that continually invest again and again in different deals, building a diversified portfolio. But now the Bank to the Future token, we've completed the design, and we're ready to code it into the platform for the loyalty and rewards part of that. So we're really excited about bringing that. I think it might be 2 to 3 weeks, and we'll be able to launch that on an episode of BF Live and share with you exactly how that's going to work. So we've got the priority access to deals, which is a very popular feature of our Bank to the Future token. We got 50% discounted trading fees, and soon we'll be having the rewards and loyalty scheme using the Bank to the Future token to reward those that have been the most loyal investors, and create a real ecosystem where they can use that to get discounted trading fees. They can use that in order to get priority access to deals, and they can get those as a result of being a loyal and continual investor. So thought I'd just slip that one in. Do we have any more questions for Mida? Because I do want to try and fit in some portfolio news, but also if there's some good questions, let's continue to take those.
Yeah, we do actually have some good questions here. So the next one that we have here is, will the STO growth be similar to crypto?
So I'll answer from my perspective. The ICO growth was really, really slow. It was a slow burner, but suddenly it became really, really big, and it coincided with a crypto bull market. So there's so many parameters in that. So we could have an existential risk event in the traditional financial system, a systemic risk event that leads to mass Bitcoin adoption and an ecosystem of security tokens going up at the same time as challenges in the traditional markets where traditional stocks and bonds are crashing. And maybe that leads to, there's so many different factors that can happen here. In terms of the security tokens in general, I think it is going to be that one or two particular case study that creates an aha moment about how you can do things in a completely different way. And I think once you get those, we're certainly going to be looking to launch one of those in 2020. And we're really excited about bringing, 6, 7, 8, 9 more deals like that to replicate that if we can get success with the formula on how we actually do that. So I think it's certainly something that I think can grow really fast, but it's just about getting that formula right of the exact right product that produces the exact right amount of returns for the risk profile of the investors and getting that traction around it. And I think it's going to be product led, and it's going to be one particular offering. Just like the Ethereum token cell. Prior to that, we had smaller ones like Storage and Factum and Omni and MadeSafe various ones. But then the Ethereum one was the landslide moment. Then Ethereum launched, and you had the ERC20 standard. I'm trying to remember now, what was that? It was the DAO. Obviously, the DAO suddenly, it was a disastrous story in the end, but it suddenly came along, raised 150 million, and really that showed what was the potential. And then you had a wave of ICOs there. I think you'll see another thing in the security token ecosystem. That one landmark product hopefully will be involved in that in 2020. And then that can lead to a wave of creating a formula that works and attracts lots of new liquidity and an ecosystem that evolves around it. So I think you can see that level of liquidity, because remember, the ICO boom was just retail. There wasn't really that many institutions playing in that. When you can create products that are right for institutions, right for retail, you've got the liquidity of all the capital markets, and that's got to be the goal here. And the goal is to create something better than what was created before. If we create the same thing again, then what was the point? There's something better has to be created. What's your perspective on that, Adam?
Yeah, for me, it's just, so exciting to have lived through first kind of the beginning of Bitcoin to the beginning of the ICO, which I still believe is an amazing thing and will live on as is. But the STO, no one's really touched the surface yet of its potential. Things have not been ready yet. People need to use their imagination more, and to be able to combine an understanding from a legal regulatory perspective, a technological perspective, and a market perspective to really give and pioneer that industry, and take people forwards in the same way that Ethereum took the ICO forwards. So to be at that forefront, on the front lines, and to be able to craft that industry is a very very much a privilege, but it's also great responsibility, because certainly don't want to have any burnouts like the ICOs some of them had. We want to ensure that this mode of finance is sustainable, that people really take the real benefit, the long-term benefit of this new form of finance. And so, we're really very much at the beginning stages. I think people talk about security tokens, but misconstrued it as just, the old industry with a bit of technology. That's not the industry that I want to be involved in. The industry that I want to be involved in is one that's crafting a new form of finance and a new mode of finance. And, the ICO managed to do that. The STO needs to be managed just as, we need to use our imagination and combine these different levels of expertise to produce something new, not just recreate the old.
I think that's a great place to take a quick pause and look at some of the portfolio news. Bank to the Future. I've got a few articles that I'd like to cover. And I know we did start fairly late because I was having some setup issues. So if we got time for one or two more questions, then we can close out there. But just to cover some of the Bank to the Future portfolio news, we had a lot of coverage after our strategic investment in BMI Capital and our US expansion plans. As we mentioned, that we've been working on 3 major deals this year. We got more deals we'd like to we're working on next year. But really, we want to combine this together in 2020 to launch the next wave of security tokens, given the work that we've been doing. So we've got there was securities.io, I think that is, covered us the story there. Or the other article. Obviously, Telegram, the case continues. And they've been disputing Tether. I got the wrong story here. Tether made an announcement again that following their Leo initial exchange offering that they did, that the Tether is now fully backed after the crypto capital case. If you've been following that, then please do check out the discussion forum in the investor zone. If you're an investor in Bitfinex through the platform, you can get all the documents and follow the case there. But Tether is made a statement that they're now fully backed again, and hopefully those crypto capital funds that were seized do return and make a bit of a windfall for both Leo holders, token holders, and also equity holders in Bitfinex, which still continues to be the most liquid secondary market on Bank to the Future at this stage. So that's the Telegram story as well that I was covering. And obviously Telegram is disputing, and it's going to be a landmark case and an important case to see where this actually goes. But it's asking the courts to dismiss the filing from the SEC, and we'll see what happens next with that story. Also, this was the article I mentioned earlier where CoinDesk did a quick interview with me, and we were forecasting with the products that we're creating and the strategy we've been following this year. We're looking at how security tokens can do things a lot better than traditional equity. We still are a believer in equity, and we think there's a real combination, as we've discussed throughout this show. But we're forecasting, if things go well with our launch at the North American Bitcoin Conference in Miami, then we think that 50% of the deals in the future next year could follow that formula if it produces a much better product for investors moving forward. So we're really excited about that one. Voltoro still on the platform, and they passed the $1 million raised mark. Next week, for those of you that are Priority Access deal members, we've been working on our new structure, thanks to our integration with Prime Trust, in order to have a US compliant escrow services and card payments. And we're looking to launch our next deal, hopefully next week, just being signed off by the broker dealer as we speak. For both US and non-US investors, it's a unicorn company, and we're excited about bringing that to market. If you hold 10,000 Bank to the Future tokens on your BnkToTheFuture.com account, then you will get the priority access notification. And it's a small allocation, so it might be all subscribed to by priority access members. So make sure that if you want to find out about that. We've also got another big deal that we're working on, and 4 other smaller, earlier stage companies. And that's probably going to wrap it up for Christmas, because Christmas is always a quiet period. So that's our next move. And then, as we mentioned, we've got a few more deals that we'll be launching in the new year in 2020. I think we'll do obviously we'll be going live each week on Bank to the Future Live. And we'll also be doing some year-end reviews and more shows like this. Just let us know what type of content that you would like to see. I think that's everything I've got from the portfolio news. I'm just going to put my face back for the final section. Maybe there might be room for one more question, or we'll close it off here, because I know we did start late. How do I stop sharing my screen? I think I've done that. And let's bring my face back. And I think Adam dropped off. Is probably pretty late there in Singapore. He was trying to figure out his internet connection. I think it's just us. Famida, should we do one more question, or should we close it out here?
Yeah, sure. I mean, we do have one question, which I think you could probably just close out with, if that's cool.
Okay, let's do that.
Yeah. Basically, how does the auto dividend work with STOs?
Well, the STOs are programmable. So if you want to program in that you automatically pay dividends to token holders, then depending on which protocol and which type of product you're actually using, then it can automatically go to the wallet of the person that owns that security token. So that's one of the exciting opportunities. It all depends, as Adam said earlier, it's about using the imagination of the issuers to create better products for investors that do things in better ways, and then the technology can be used to program those products into that. So those can either be done in centralized ways, or they can be done in more decentralized ways, as long as they were onboarded in compliance with securities laws and the various other regulations that these products are going to have to adhere to. So it can be as simple as, if you hold your token on, say, the Liquid network, the side chain on top of Bitcoin, then that address can automatically be credited with those dividends. Or it could be done in a more centralized way if you don't want to store the private key through a platform like Bank to the Future. Or it could be done through a protocol like Securitize is building on top of Ethereum, and some of our other portfolio companies that are looking at lots of different ways to do that. There's lots of different ways that this can be done, and will be done, and eventually a standard hopefully will prevail to launch those products. So I think that's probably the 1 hour mark. Hopefully the connection wasn't too bad with Adam. Hopefully it was you could actually hear that. But he is out there in Singapore on the ground at the Block Show Asia conference. And I'm also moving around in my hotel room at the moment between countries. So thank you very much for those questions, Famida. I think it's interesting to see where this all goes. Hopefully it whets your appetite for what's in store for 2020. Yeah, we'll see you this time next week on episode 40 of Bank to the Future Live. Remember to subscribe to this channel so you don't miss any episodes. Hit the bell symbol so that you get notification from YouTube each and every time we go live. Follow us. You can either watch us on Twitter or Facebook, or join our Telegram channel, and we'll have all links below in the description. And that's going to do it for episode 39 of Bank to the Future Live. Thank you.